Today's topic, profiting amid uncertainty. I was looking for, let me go to the headline. There's two issues with what I think is going on in the marketplace today, right now. And those issues are, number one, that the risks are very real in the market. So when I talk about the economy, doesn't sound, all that bullish, especially given the valuation numbers in the market. But the market is dominated by stimulus right now. And so the bottom line is risk markets can keep rising as long as the bond market allows it. I like to say every day I wake up, I look at the 10-year note, it's 62 basis points plus a couple of minus basis points. That's it. Unlimited printing can continue. Unlimited borrowing can continue. When the bond market decides to take that away, the game will end. It's not doing that right now. That is a definition of a break in of this, and I'll show you some charts. If not historically tight range, one of the tightest ranges we've seen in the last generation in terms of 10-year yields. They break down hard. That is a signal that the economy is going into serious trouble. If they break up hard, and that's what I think the next move will be, that is a sign that inflation might be returning. And if inflation is returning, then I think that could end this game. But I want to emphasize that's not happening just yet. So what are the risks and what are we going to talk about? The case counts keep driving the reopening and the reversing decisions, and I'll talk about that in a second. I think that is probably the most important economic indicator right now. Not always, but right now. The term is driving mobility and rehiring. Earnings are not good. The federal government's magic deficit is leading to a huge cash balance at the Treasury. If there's ever an argument for MMT, when I get to this chart here, it's an amazing chart. That's it right there, that MMT works, and we can do away with the IRS, and I'll explain that when I get there. If this ends well, can we end income taxes? Inflation to 21 story, and does a vaccine matter? Lessons from China. The bottom line there is that the Chinese, they have no cases. They effectively have the case count you would expect if you had a vaccine, but their economy is not returning to normal. The psyche has been damaged there, and I suspect that we are overplaying what a vaccine might mean, and I'm assuming it works as well too. The market is dominated by stimulus, with the Feds buying. It's put the bond market to sleep. Can we trust signals from the tips market? I am very skeptical of the tips market, even though it's kind of telling the story I think we're going to next. When you have a huge price insensitive buyer like the Fed dominating that market, I get very leery of what we should take away from that market too. ETF flows are doing something unprecedented. Everybody is co-investing with the Fed. Equity flows are really not going anywhere, and the retail market is bifurcating. All right, let me jump into some of these charts and some of these numbers here. Slide 3, the new case count in the US. So as of last night, we had another 70,000 cases or so. The orange line is the 7-day average. That made a new high too. For those of you that follow me on Twitter, I publish these charts all the time. In fact, I put this chart out last night. And inevitably, every time I put this chart out, I get a whole bunch of comments back. What about deaths? What about per million? What about the age of the people that are getting infected? What about the average hospital stay? And all of those comments are structured at one idea, that they want to talk about the medicine and about them and about the health of people that are getting this, and the risk of serious complications or death is going down. No doubt it is. But from my perspective, the reason I send these charts out is that doesn't matter. What matters is that this orange line is what's driving the economy. You can argue till you're blue in the face that deaths are down and that younger, more healthier people are getting it and they have a stronger chance of survival. We've got better therapeutics. We've got better medical techniques. And at the end of the day, if this orange line goes up, your governor shuts down your economy. People self-elect to not move, and your economy takes a hit. Full stop. And you can continue with your argument about how everybody's not going to die from this, and your economy is still going to take a hit. And I want to show that in the next couple of charts. This chart of the United States comes from the New York Times upshot, I'll write that down, the upshot section of the New York Times website. That's kind of more their data analytic section or so. And what they've done is they've looked at various metrics of the reopening of the economy, and they've put the into 4 different categories. The states that are reopened, that means they're done and they're fully open.